Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing language of corporate finance to find the real story. Today we are diving deep into CRISPR Therapeutics AG's latest annual report. Get ready because this one is packed with gene editing innovation, a groundbreaking approved drug, and a whole lot of financial maneuverings that give us a peek into what the future might hold. Before we start breaking down the numbers, if you appreciate getting straight insights from corporate documents like this, make sure you are subscribed. We also have a Discord community linked in the description below where you can connect with us and other viewers to discuss these reports further. Alright, let's get into this 10K filing from CRISPR Therapeutics AG. This document is essentially a yearly checkup for the company, giving us all the juicy details about their business, their risks, and importantly, their financial health. At its core, CRISPR Therapeutics AG is all about making revolutionary gene-based medicines. They are a leader in developing therapies using CRISPR-Cas9 technology, which is a powerhouse for precisely changing DNA. They've already achieved a massive milestone, getting the world's first CRISPR-based therapy, called Casgevy, approved in 2023 with their partners at Vertex Pharmaceuticals. This is a huge deal, moving from discovery to an approved medicine at a record pace. They are working on genetic disorders like sickle cell disease and beta thalassemia with Casgevy, and expanding into other areas like in vivo approaches, California RT cell therapies, and regenerative medicine for conditions like type 1 diabetes. Now, like any cutting-edge biotech company, there are big risks involved, and CRISPR is very upfront about them. A major one is that if they can't successfully develop drugs, get them approved by regulators, and then successfully sell them, their business will suffer. This is a common theme in this industry because developing new drugs is incredibly difficult, expensive, and takes a very long time. They are also banking heavily on their gene editing technology, which is still pretty new. This means predicting the time and cost to develop these drugs is tough, and regulators are being extra cautious with these types of treatments, which can also lead to delays. And here is a biggie for investors developing new drugs is like a money furnace. CRISPR has been burning through cash, and they admit they will need a lot more money to keep their projects going. This means they'll likely have to sell more company shares, which dilutes the ownership stake of current shareholders. If they can't get this funding, they might have to slow down or even stop some of their promising research. Alright, let's talk numbers. This is where things get really interesting. Looking at their revenue for the year ended the 31st of December 2025, they reported a total revenue of just $3.5 million. This is a massive drop from the $37.3 million they reported in 2024. The big reason for this sharp decrease is that their collaboration revenue, mostly from Vertex, went from $35 million in 2024 down to zero in 2025. This tells us that a key revenue stream from their partnerships has dried up, at least for this reporting period. Now let's look at their expenses. Their collaboration expense net, which is primarily related to their Casgevy program with Vertex, jumped significantly. It went from about $120.7 million in 2024 all the way up to $213.5 million in 2025. This is a huge increase, nearly doubling their expenses in this area. The company explains that this jump is mainly because they no longer have the option to defer certain costs on the Casgevy program that they had in prior years. So, while their revenue from this collaboration has disappeared, their expenses related to it have surged. This combination of soaring expenses with disappearing revenue is a clear red flag. Then we have this big number, $96.3 million for acquired in-process research and development for 2025. This is a new expense that wasn't there in 2024. The company explains this is due to entering into a new agreement with CRISPR Therapeutics, while it is common for companies to make strategic acquisitions or in-licenses. A charge this large means a significant portion of their funds went towards acquiring what is essentially an unproven research project. Putting all that together, their loss from operations really widened. In 2025, it was a staggering $664.6 million, a big jump from the $466.6 million loss in 2024. This is a crucial number because it shows how much money the company is losing just from its core business operations before even considering other income or taxes. That is nearly a 42% increase in their operational losses year over year, which is a substantial acceleration of their spending. Scroll total assets $Sympol on the asset side, CRISPR Therapeutics still holds a solid chunk of cash and marketable securities, totaling over $1.9 billion as of the 31st of December 2025. This is good news. They have a financial cushion. Their cash and cash equivalents themselves increased to over $347 million, and their marketable securities also grew slightly. This strong liquidity position is vital given their high rate of spending and ongoing need for funding. Now, let's touch on intellectual property. This company's whole game is built on some very sophisticated technology, and they rely heavily on licenses from others. They are very clear that if they can't get or maintain the rights to use this technology, or if disputes arise with the licenses, it could really hurt their business. This dependence on external IP creates a layer of risk that is always present in this field. Manufacturing these advanced gene therapies is no walk in the park. The filing highlights that if they experience problems with production, quality control, or keeping up with regulatory rules, it could delay everything from development to getting their drugs to market. It is a complex process with many moving parts, and any hiccup can have big consequences. Here is one of the most critical risk factors they mention: intellectual property. Their entire business relies on their gene editing technology and patents. If they can't get, keep, or protect these patents, or if competitors find ways around them, they could lose their competitive edge. This is especially true in the fast evolving gene editing field where patent disputes are common and can be incredibly costly. They are involved in ongoing legal battles over their CRISPR technology, and the outcomes are very uncertain. They also point out that a chunk of their technology comes from licenses, and they depend on those agreements staying in place. If those licenses fall through, it could stop their development cold. This reliance on third-party licenses is a crucial point to remember when assessing their overall risk. Let's wrap this up with our take. CRISPR Therapeutics is operating at the cutting edge of biotechnology, which is exciting, but also comes with significant risks. The approval of Casgevy is a major triumph, demonstrating their capability to bring a revolutionary therapy to market. However, the sharp decline in collaboration revenue in 2025, coupled with a substantial increase in operating expenses, including a large acquisition of in-process R&D and a widening operational loss, paints a picture of a company investing heavily for future growth but facing considerable financial challenges in the short term. Their strong cash position is a significant asset, providing a runway, but the need for continued funding and the inherent risks in drug development and intellectual property protection remain substantial. They are in a race against time and competitors, and success hinges on navigating these complex scientific, regulatory, and financial landscapes. What are your thoughts on CRISPR Therapeutics' AG's financial health and their future prospects? Do you see their heavy investment paying off, or are the risks too great? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more in-depth corporate analysis. And don't forget to join our Discord community, linked in the description, to keep the conversation going. Thanks for watching, see you next time.